Well, in a previous video, I talked about how day trading was a pretty solid way to put yourself in financial ruin. Now you can check out that video if you follow this link here. At the end of the video, I hinted at something, and that something was high frequency trading. That basically is facilitating your financial ruin. Now, in that previous video, the basic premise was you should consider the base rate. You should consider the statistics. And statistically speaking, you are going to lose money. And that's not versus the market. That's losing money, period. Less than 10% of the people make any kind of long-term profits during day trading. So that's what you should expect if you engage in that activity. Now, when it comes to high frequency trading, the thing I alluded to was this hollow core fiber. So what that does is it allows people to transmit data kind of at the speed of light in a vacuum, which is as fast as you can go. Now, if you think about information in Chicago, information in New York, and you want to get that information back and forth round trip, an ordinary cable that takes about 14.5 milliseconds. Back in 2007, spread networks was able to get that down to 13.1. They did some further tweaking, got that down to 12.98. Then in 2012, TradeWorks created a microwave communication. They got it down to 8.5 milliseconds. Now, hollow core fiber would be even faster. Now, one thing is right now it's pretty only viable for shorter distances, but that's getting better and better. If they were ever able to use this kind of cable for those types of distances, we would expect this to go down even more. So why does this matter? Well, the thing is, if you're looking at two different markets and the prices don't match, there's an arbitrage opportunity there, right? You can buy it in the lower priced market and you can sell it in the higher priced market, right? So if you can do this before someone else sees that there's a difference there, then that's a locked in profit. So you're seeing small price differences, you're doing tons and tons of trades, this all adds up. And the other thing is, all this happens without you even seeing it. You never see it. So if you think about what happens here, if you have this technology, you're kind of the blue line here, you do the quick trade you don't even see it. You just don't even see this kind of thing happening. Now, another thing that high frequency traders have going for them is speed and automation, right? They're able to trade 15,225 times per second, kind of per processor. You, even as the best manual day trader on the planet, are you really doing even one a second? I don't know. This is I certainly wouldn't be capable of doing that, but they have this massive automation advantage, which means their volume is better, so they can work off of tinier and tinier little price differences and still make tons of money. So you're just going to lose this battle all day long. The other thing that they have is knowledge, right? So there are times when big players have a portfolio they need to liquidate. If they know about this, they can take the other side. That's going to push the market, right? When the market kind of comes back and reverts to a fair value, then they can unload those positions. As a day trader, in your home office, you're just not going to have access to this type of information. Finally, there are algorithms out there that are better able to predict prices than human beings. There are super smart PhD guys coming up with these algorithms. Even if you are one, you're not a team, right? So between you and me just doing it on our own, manually in our home office, we're just dumbasses in comparison to these teams of theoretical scientists that are able to accurately predict small price movements and whatnot. So next time we're going to talk about, I guess, high frequency trading in a different light, not compared to day traders, but there are some people that are huge advocates of it. And there are others who have big criticisms. So we're going to talk about those two dynamics of high frequency trading. Thanks so much for listening.